Have you ever wondered what the perfect $10,000 investment portfolio would look like if it was built entirely by artificial intelligence? Imagine a portfolio that balances growth, stability, and long-term wealth creation, optimized using AI-powered analysis to maximize returns while managing risk. Well, that's exactly what the Investment IQ Insights team is revealing today. Before we jump in, make sure to subscribe to the channel and hit that notification bell so you never miss out on the latest AI-powered investing insights. We break down stock market strategies, smart investment opportunities, and AI-driven research to help you build wealth. We also want to remind you that this video is for educational and entertainment purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. Now, let's talk strategy. How did ChatGPT determine what stocks and ETFs should make it into the perfect $10,000 portfolio? ChatGPT analyzed key factors like diversification, growth potential, dividend income, risk management, and cost efficiency. A well-balanced portfolio needs to be diversified to spread risk across multiple asset classes. It should also have high growth opportunities in emerging industries like AI and technology. Dividend income ensures stability and passive cash flow over time. Low fees help maximize returns by avoiding unnecessary costs. And of course, the portfolio needs to be optimized for long-term success, rather than short-term speculation. With that in mind, let's break down ChatGPT selected investments that make up the perfect $10,000 portfolio. Number 1. The S&P 500 ETF, ticker VU, asset allocation 40% or $4,000. To build a strong investment portfolio, we need a solid foundation. That's why 40% of the portfolio is allocated to the Vanguard S&P 500 ETF. This ETF tracks the top 500 U.S. companies, providing instant diversification across various sectors like technology, healthcare, finance, and consumer goods. Historically, the S&P 500 has delivered an average annual return of around 10%, making it a reliable long-term investment. By investing $4,000 into the Vanguard S&P 500 ETF, we're securing exposure to the biggest and most stable companies in the market, helping us weather downturns while still capturing long-term growth. Number 2. The AI powerhouse, NVIDIA, ticker NVDA, asset allocation 20% or $2,000. AI is the future, and NVIDIA is at the center of it all. From powering ChatGPT and machine learning models to driving advancements in self-driving cars, cloud computing, and AI-powered data centers, NVIDIA is one of the most innovative companies on the planet. By allocating 20% of our portfolio to NVIDIA, we're betting on the long-term expansion of AI, semiconductor technology, and the increasing demand for high-performance computing. Yes, the stock has already seen massive gains, but with AI adoption still in its early stages, the potential upside for NVIDIA remains huge. Number 3. The dividend growth giant, Microsoft, ticker MSFT, asset allocation 15% or $1,500. A perfect portfolio should include both growth and passive income, which is why Microsoft takes a 15% allocation. Microsoft isn't just a software company, it's a dominant force in cloud computing with Azure, gaming with Xbox, AI, and enterprise software. What makes Microsoft even more attractive is its consistent dividend growth, which means you're not only benefiting from stock appreciation but also earning steady income over time. With AI integration across its entire ecosystem and strong financials, Microsoft is a blue-chip stock that adds both stability and growth potential to our portfolio. Number 4. The Vanguard FTSE Emerging Markets ETF, ticker VWO, asset allocation 15% or $1,500. Investing in just the US market isn't enough, we need global exposure. That's why 15% of the portfolio is invested in the Vanguard FTSE Emerging Markets ETF. This ETF gives us access to fast-growing economies like China, India, Brazil, and Southeast Asia, where industries are rapidly expanding and middle-class wealth is rising. Emerging markets tend to outperform developed markets over longer periods due to their higher growth potential, making this an essential part of a well-rounded portfolio. Number 5. The high-risk, high-reward play, Celsius Holdings, ticker CELH, asset allocation 10% or $1,000. For the final piece of our portfolio, we're adding a high-growth stock with explosive potential, Celsius Holdings. This energy drink company has taken the market by storm, growing revenue by over 1,000% in the last 5 years. It's expanding globally, building partnerships, and rapidly gaining market share against competitors like Monster and Red Bull. While this is a higher risk play, a 10% allocation allows us to potentially capture massive upside without putting too much of our portfolio at risk. If Celsius continues its growth trajectory, this investment could turn into a huge winner over the next decade. Now that we've built the portfolio, let's quickly recap how it balances risk and reward. 40% in the S&P 500 ETF provides a stable core investment. 35% in AI and tech stocks, NVIDIA and Microsoft, positions us for massive growth. 15% in emerging markets diversifies the portfolio globally. 10% in a high-growth stock, Celsius, gives us an exciting moonshot opportunity. This blend of stability, growth, and passive income creates a well-rounded portfolio that can withstand market fluctuations while maximizing long-term potential. So, there you have it, the perfect $10,000 portfolio, built by ChatGPT. This AI-optimized selection of investments aims to balance risk and reward while positioning us for long-term success. But now, we want to hear from you. What do you think? Would you change anything in this portfolio? Drop a comment below and share your thoughts. And if you enjoyed this breakdown, make sure to subscribe to the channel for more AI-powered investing insights. We cover everything from stock picks to portfolio strategies and cutting-edge investment trends. And don't forget to check out one of the videos on your screen now for even more expert investing content. Thanks for watching, and we'll see you in the next video.